Welcome to tonight's workshop. Oops. Welcome. It's the tax planning and Schedule C, filing as a business because you are one, by practice, best practice. And we want to start by thanking our principal sponsor, FRAC, the Fall River Arts and Culture Coalition. They are running their Ignition project, and we'll tell you more about that when we pass it on to Ashley. We want to thank our funders, Mass Cultural Council and the New Bedford, Carver, and Dartmouth local cultural councils, and Rockland Trust Charitable Foundation. We also want to thank our partners, New Bedford Creative, New Bedford Art Museum, National Park Service, S&G Project Gallery, and the New Bedford Co-Creative Center, as well as FRAC. And I want to give us a few ground rules before we begin. Please, when you have questions, type them into the chat. We'll be monitoring the chat. When we select your question, we'll ask you to unmute so you can ask it and be recorded on the video. We are recording tonight. We also want to make sure that if you don't want to actually ask your question on screen, that you type that in with your question. Oops. Wrong key. Please keep yourself on mute during the workshop unless you're asking a question. Obviously, you can unmute when you're asking a question. That's very helpful. We suggest you put your Zoom in speaker mode rather than gallery mode during the presentation. That helps in terms of being able to know who's talking. And closed captioning is available. You can see down here on the bottom of the screen, there's that's the bottom of a Zoom area, and you can see the CC. That's how you turn on closed captioning. It is on, and the transcripts are happening. We have a short survey that we'll be launching towards the end of the workshop. It's anonymous, but the info helps us to improve, helps us with our funders and helps us to improve our programs. So that's important to us. We also are happy to have anybody email us with comments, add them to the chat tonight, or put them on YouTube or Facebook. We hope that you've already liked us on YouTube and Facebook. Resources that we show tonight will be available to download from the website shortly after the workshop. And the workshop address, the website address is right there on screen. We'll put the recording of this workshop up online in a few days. For those who missed it or want to review, all our workshops end up online, which is important to us to make them readily available to people. We hope that you've liked us on Facebook and Instagram and signed up for our email list. That's how we communicate with all of you. And our workshops are always free to produce, free to do, but they cost us to produce. So if any of you can make donations at any point, we're happy to take them. Your donation will be tax deductible. And there's a donate button on the top of every page on our website. Now, FRAC, who's our principal sponsor tonight, is the Fall River Arts and Culture Coalition. It's an organization you should all know. Many of you do. It's important that Ashley give you a little bit of information about what's going on here tonight. Oops, for some reason, I lost. There we go. They're the principal sponsor, and I'm going to turn things over to Ashley right now so that she can tell you a little bit about the Ignition program.
All right. Thank you, Den. I appreciate that, and welcome everyone. So the Fall River Arts and Culture Coalition, better known by our acronym FRAC, F-R-A-C-C. We are actually part of the One South Coast Chamber. We are a committee of the Chamber. And so I'm happy to welcome you all to this workshop. And so I just want to quickly talk about the Ignition Project. So the Ignition Project is more than just the workshop that you're participating in tonight. We also do granting through this program. And we have a space on 341 South Main Street in Fall River that is part of this program. So I do encourage you to go and visit our website, which is thefrac.org. And it is literally THEFRACC.org. And there you can go to our initiatives tab. And in there, you will find lots of information about the Ignition project. And I definitely encourage you to check it out. This is very timely. Coming in November, we have a whole bunch of new programming and grant applications available for creatives. The programming is available for everyone. The grant applications are specifically designed for creatives that are living and or working in Fall River. But I do encourage you to check out FRAC. We have a monthly meeting that happens the second Monday of every month. We're very active on social media. It's not too hard to find us if you just look anywhere in Fall River. But I do thank you for joining us tonight. And Ben, I'll turn it back over to you.
Okay, thank you, Ashley. Let me go back to my little screen share. And tonight we have panelists who will be talking to you about the topic material, and we'll be answering your questions later on. Jenny Clark, who's the founder of Innovative Cloud Accounting, Inc., which is a bookkeeping and consulting firm, and she supports entrepreneurs, small businesses, and individuals with bookkeeping, consulting, and setup. She started in 2020 and has years worth of experience in the as a bookkeeper prior to that. Melissa Rizzo, MST, is also on the panel, and Melissa is owner of M. Rizzo Tax, where she focuses on business advisory and tax services for small business clients. She's been in the accounting industry for over 15 years, helping businesses grow. She also helps prepare tax returns for ongoing clients as well as Jenny's clients. She too has years of experience in the field. And me, who besides hosting tonight, will also be giving you a small presentation. I've been a freelance consultant with my company, Resource Development Associates, for over 4 decades, and I've been filing a Schedule C all that time. It's a learning curve, but it's a good one and well worth having. So with that, I'm going to turn over the program to Melissa and stop my screen sharing. Whoops. Oops, I just lost the screen sharing option. Oops. So we suggest also that you read the full bios on the website and when you check out the resources. Okay, Melissa, on to you.
Great, thank you. And thanks so much for having me. Hopefully I can get my screen sharing. So me and Jenny shared some slides, so you'll see the common thread throughout them both. And so let's start it. So you just gave the intro. Today we are going to talk about 1099s versus Schedule C and why it's important to file a Schedule C. We're going to talk a little bit about self-employment tax and, how that plays into your bottom line figures. We'll be talking about grants and how those are more likely than not taxable, along with sales tax. When should you pay it? And then we're going to focus on what happens when you make a profit and when you get a tax refund, what should you do about it? And how your motive should be kind of profit forward and focusing on making a profit when you're making those business decisions. And then we're going to talk about why some people, which is kind of more of a controversial area, but why some people may not put all their deductions on their Schedule C. A lot of people need funding or loans and need to show a certain income number. So there are times that people don't put all the expenses, even when they are supposed to or allowed to get them. So we'll talk a little bit about that, and then we'll jump into how it's really important to make sure everything's separate. So when you are focusing on your business, you're able to see what your bottom line number is. So the big thing that we're talking about today is your Schedule C and why you should file a Schedule C. A lot of people may be receiving a 1099 for work that they have sold or done. They may receive one for a grant they received. And a lot of people don't realize that what you can actually do is file a Schedule C. You more likely than not qualify as a business. And the benefits of doing that is you can lower your tax liability by putting on deductions, by expensing the items that were related to the grants funds received or to the production of the work you're making. Another benefit of filing a Schedule C is you have cleaner records. You can see how much money you actually made. A lot of people go into this and they're selling based on what they think the value is worth versus what kind of profit they want to make on it. And I think it's important to put in line all your income and expenses and actually see, well, how much money am I making on this? How much money am I making on this product I'm selling, on this service I'm providing? It's really important, and it's really important for goal setting as well. The next thing you should think about when we talk about Schedule C is self-employment tax. So what people don't realize is when you're not a W-2 employee, like you're not working for an employer and you're working for yourself, you do have to pay self-employment taxes on your bottom line figure, which will be your income less your expenses. And that's pretty much to cover, Social Security and Medicare taxes. That's how the government takes that extra money out for that. So the good rule of thumb is your bottom line number, which is your income less your expenses. You typically want to take 30% of that, put that to the side just to cover taxes in the end. More likely than not, it's not going to be a large number, but it's always good to remember that 30% kind of back in your head of what you should be putting aside. When thinking about Schedule Cs, I know a big talking point today, and what was brought to my attention is that most have received grants or looking to go out and see if they're able to gain any grants. And then the one thing I'm sure most don't realize is that grant income more likely than not is taxable federally. And there are some different rules within the state of Mass, and it's really specific on the type of grant. But I would say more than 90% of them are also taxable in Massachusetts. All of them are different. They're specific. There are COVID-related grants that some are taxable, some are not. So I think it's good to look at the specific type of grant it was, do some research. You can message me and ask me. But the big key point is what people don't realize is that grants are taxable. And so what do you do when you receive that 1099 at the end of the year for the money received? Well, a good thing to do is keep track of the expenses that are related to that. If you're receiving it for a certain project or such, there are always expenses related. So you want to be deducting those expenses against the income received. So in the end, the bottom line number, your taxable income isn't that high. Another item some people may not be aware of is sales tax. And it's kind of a big number here in Massachusetts. We're a little bit higher than a lot of other states, unfortunately. But the one thing I think some people don't realize is sales tax isn't based on volume, it's based on what you sell. So if you sell one tangible item, something you can hold in your hand, that's how you consider tangible, or maybe you rent something like that, then again, a tangible item, something you can hold in your hand, is a good way to think about it, is you're responsible for paying sales tax for that. You're responsible for paying sales tax, and even put a little note at the bottom, even if it's just $20, you're supposed to go ahead and register. You're supposed to send that to the state of Mass. So that is something to think about. When you're there is a little bit of a process signing up with the state of Mass, registering with them. That's something that Jenny works with too, going ahead and signing people up for that and filing the sales tax. But I think people don't realize it is something that needs to be done. And unfortunately, it's even on smaller sales, even just those one items there. So on a more positive note, instead of talking about all the taxes that we need to pay, another thing I'd like business owners to think about is, what happens if they get money back? What happens if they get money back from their tax return? Or maybe they made some extra money this year. Maybe you had a good year. Maybe you had higher profit. You have some money in the bank account. A lot of people are tempted to take that money out, and go spend it on themselves or do something for themselves with it, which is always nice as a nice reward to pay themselves. Another thing I always suggest, especially when the market is a little turbulent, is reinvesting it into the business. And I think a nice way to think about that is we all have expenses that are coming up, and we have items we want to purchase or goals we want to obtain. One big one, a lot of people use Excel spreadsheets to keep track of their accounting records and different things like that. But a good way to, if you're looking to take the next step, wait till you have that good profit that year, wait until you get a tax refund, and then maybe you can look into upgrading your accounting software. Maybe you need new equipment that, will give you a faster turnaround. Maybe you need to buy some more inventory. It's always nice to take that money and put it into marketing, because you're only going to grow the business if you put it into marketing. So, the one thing I do like to stress when I'm talking to any business owners, small business owners, large business owners, is when it comes time to figure out, are you going to reinvest this money? Are you going to pay yourself a little bit extra? Although it's always nice to pay yourself a little bit extra, it's probably a really smart decision to think about reinvesting it a little bit into your business. But we can only do that if we have a profit motive, which means when we're going into our business, we want to focus on making a profit. There's a couple reasons. One, the IRS wants you to, if you want to be able to take deductions, if you want to be able to lower your taxable income, the IRS wants to make sure you have a profit motive. They want to make sure this isn't a hobby, which means you're kind of going at this with the, what's the best way to say it? You're going at it basically not just for fun, but to make money from it. You want to make sure you know what your expenses are, what your gross profit is. Jenny will talk a little bit about direct expenses so you can figure out your gross profit. But the big thing is, okay, I sold this for A, and this was my cost B, and your profit is C. You always want to make sure you know what that B is. You want to know what your expenses are. You want to know what your expenses are, so you make sure that you're priced right, so you can make that profit, so you can reinvest that money, so you can grow into the business. The last thing I will leave with you is the importance of separating your income and expenses. So I know it's, even I have done it in the past myself, but we usually take our personal checking account, personal credit card, whatever we may have easily accessible. We're all very busy. We're all juggling a lot at the same time. And we kind of revert to the easy method, which is using our personal funds, using our personal credit card. And now we have business items on our personal credit card. We have the mixture of personal and business. Then we also have our business items within our personal bank account. So what becomes trying with that is, say you're traveling up the street to the school to pick up your kids, and then you're traveling to deliver something to a gallery, or you're traveling to go to a networking event. Now you have gas on your bank accounts records or your credit card records 3 different times. And it's going to be hard to look back and say, oh, this was for my business. Oh, this was for me personally. So the one most important step to take, if you haven't already, is to open a separate bank account. If you're using a credit card, open a separate credit card and make sure that you use that bank account or credit card just for the business and leave your personal stuff in another account. I know it's hard to keep up the records. No one wants to do accounting work. No one wants to code what's gas, what's marketing, what's supplies. But if you have it on a separate account, it's going to be easier if you do it mid-year, end of year. I know there are a lot of people that wait to the end of the year to do it, which is fine. But if you have everything in a separate account, it's going to make it so much easier. So, with that said, I can either answer questions or turn it over to Jenny, but I'll stop my screen share and give it to you then for either getting to Jenny or answering any questions.
Okay, at this point, we're going to continue on with Jenny. Again, let me just remind people, because I know people came in late and didn't see all the intro stuff. If you have questions, feel free to type them into the chat. We will call on you and ask you to read them out loud, or if you type into the chat that you'd rather have us read them, we will do that. So we're going to move on from here to Jenny, continuing the presentation.
Okay, thank you, Den. Okay, so I'm going to start with why to use accounting software. I know you're a small business, you don't want to spend the money. I get it. I have customers that use Excel spreadsheets, and that is okay if you're super small, you don't want to spend the money. But once you start growing, it's not going to be easy to keep track on an Excel spreadsheet. Spend the money, make the investment. It's well worth it. It's well worth keeping the connection, keeping track of all your expenses, connecting your bank feeds, and keeping track of everything on a monthly basis, being able to create a budget, being able to see day-to-day, month-to-month, what your income is, what your expenses are, how you're doing, how your business is growing, keeping track of all these 5 accounts here, your assets, which, if you don't know, are sorry, I'm not good at this, so just so we all know. Your assets are anything that's owned by your business. So your computers that you've paid for, your equipment, anything like that. Your liabilities is anything your company owes, loans, car loans, bank loans, mortgage loans, anything like that. Equity is anything that is, sorry, your liability is minus your assets, is your equity. Of course, your revenue is any sales coming in, anything like that. And your expenses, rent, supplies, anything like that. It's so much easier to do that in an accounting software than on an Excel spreadsheet, keeping track of your receipts. You know, I've had customers that have given me a shoebox of receipts and just been like, here. And I'm just like, okay, I'll take that. It's receipts, they fade. You can't read them after a while. It's just not the right way to do that. So just if you're serious about your business, just get the software. Just do it. It's the right thing to do. You can do software from anywhere from $13 a month, $17 a month, $10 a month. I honestly recommend QuickBooks. It's the one that's the most user-friendly for me, but you could try anything. You can do a 30-day trial, a 14-day trial, try something out, see what works for you, what's best fits for your company, your business. and go from there. That's all you can do. Sorry. Wrong screen. So, you got $13 a month, $17 a month, $10 a month. I don't love Sage. I've never really used it, but I haven't heard great things about it. QuickBooks is my go-to. I know Xero, a lot of people use that one, but you could do a 30-day free trial, a 14-day trial, just see what works for you. But I definitely recommend a software. It's so much better than trying to keep track of it, you know, rushing at the end of the year, trying to get all your paperwork together that's in your glove compartment, in a folder, in an envelope, in a shoebox, or wherever you may keep it. If you're serious about your business, definitely get a software. Do the research, find what's best works for you. Reach out to one of us, we'll be able to help you. Okay, expenses, that's my go-to. That's literally what I do every day. There are two, pretty much split into two categories. Direct expenses is what you pay for to create the product that you're making. A lot of you are artists, so supplies, your art supplies, your paint, your brushes, your wood, whatever you're using to create your art pieces, that is your direct expenses. Your indirect expenses, that's going to be your utilities, your cell phone bill, your rent, which rent could be your storage unit, your co-working space, your art studio, your office space, anything like that. It could be office supplies, your printing paper, advertising, which is business cards, social media posts, event sponsorships, flyers, travel expenses, which travel expenses can be a little iffy. So like if you go into an art fair or you're picking up or dropping off your art for a show, you can do that. But you can only do either the gas or the mileage. You can't do both. So make sure that you're not taking both, one or the other. And keep track of what you're doing. So if you're dropping off art, make sure you're putting that in a note, in the description in your software, or a note on your receipt, whatever it is. Also, an expense you can take is all your insurances. So you should have a liability insurance or general insurance, software expense, educational classes. So you have workshops, educational workshops, reference materials. All that is business expenses. Home office. If you don't have an office and you work from home, that is all a business expense. Be careful with a home office. If you work from home, you need to have a designated space or an office to be able to take that expense. If you rent or mortgage, it's just a portion of that, depending on the square footage of the space that's designated for work. But you could take a portion of your phone bill, a portion of your utilities, a portion of your mortgage or your rent. Your CPA will be able to help you with that portion. You also get legal fees, that is for business purposes, your bookkeeping and accounting. And I'm not good at changing my things, I'm sorry. So your indirect costs are your internet, cell phone, computer, legal, I'm sorry, insurance, meals. Be careful with your meals as well. Meals for meetings with clients, not just because you are having lunch or dinner by yourself. If you're having a meeting and you're having coffee at a coffee shop, that's a business expense. Just be careful with that. You can't just go have $5,000 a year in meals. That's not really a thing. Clothing is not allowed unless it's costumes. Computers or equipment, that's an expense. That's it. Any questions? Back to you, Den.
Okay, stop your screen sharing. We do have a couple of questions, so I'm going to call the people out so they can ask them before I go into my segment. So Autumn Sear has a question about banking. So Autumn, you want to unmute yourself and ask your question?
Hello. Okay. Does the bank account have to be a business account? Or can it be like the separate bank accounts? Does it have to be a business account specifically, or can it be like any kind of bank account?
It's always good to have it as a business bank account under the tax ID number if you have one for the business. If you don't have a tax ID number for your business and you just use your Social Security number, then a personal account is fine. I mean, realistically, any separate account is fine. So you don't necessarily need a business account as long as it's separate, but it's always, you know, a good idea to set up a business account if you have a tax ID number, but no, it does not necessarily have to be one.
Thank you so much.
Okay, Diane Painter has a question about driving.
Yeah, hi. So when, like, what sort of things count as mileage? Is it work, like, is meeting with a client or a prospective client considered like different than like driving to install something?
Either one. It's a business expense. Either one is fine. They both count as business travel.
And I would strongly encourage you, if you're doing any driving that you might want to be writing off, keep a mileage log. They have them for your phone.
Yes.
Keep a paper one, but definitely.
They have an app on your phone that you could keep on your phone to keep track of that.
And the purpose of the trip.
Yes.
What's the app called?
I don't use it, but I know my old boss did. Let me see if I can find it.
Okay. Let's see. We have okay. I'm going to answer Iva's question without actually having Iva come up on screen, but yes, we will be putting the video up afterwards, and you'll be able to get to it from the website. We send out an email blast when it goes up.
Mileage queue.
There you go. Good. And Julian Wan, you have a question?
Hi, yes. Can you hear me?
Yep.
Mm-hmm.
So I had a question about the clothing, because I need to wear suits for my job, well, for my business. So does that count under the costume?
No. Does not.
So how they look at it is if you can wear it outside to another event, something else, then no. So basically the way you have to think about it is if you could wear it anywhere else outside of where you work, then no, it does not count.
Got you. So the polos that I buy with my logo on it, that would count.
Yes.
That sucks. All right. Thank you.
Okay. Jade Olson, you want to get on screen and tell us, read your question?
Yeah, hi. Yeah, my question was, obviously I'm an artist, and but I also have a side job where I have regular income, and I'm just curious as to whether this would be two separate tax returns, one for the business and one for my regular income, or can they be combined what do you recommend?
That's a great question. So it depends on your situation on what I would say I recommend, but you have two options. One's a little bit more complex. That's usually for people who are profiting, have high profits where they have separate returns, one for the business, one for the personal. More likely than not, you're just fine combining it. Again, it purely depends on your situation, how profitable your business is. But yes, if you have a Schedule C, it's on one tax return. But a lot of times, whoever's preparing your tax return, if it's not you, will charge you a little bit extra for that schedule. They typically do.
My artist clients do their personal taxes with a Schedule C attached to it. They do it together. Which is also how I originally did my taxes until I incorporated my company.
Kaz, you have a question besides can anyone see you?
Yeah, I wanted to know how to pay estimated taxes because those are due in the next quarter, I believe, is on Friday. I need to figure that out, but every time I look at the calculators, I don't know I don't know about like all the expenses or whatever they're asking me for.
Right. And I think that, I think the only way you'll really know how much you should be paying in estimated taxes is by knowing, for that quarter, what you made in income, less all your actual business expenses. And then, the 30% is for both federal and state. You have to kind of look at what your tax rate was on your previous tax return to get that correct percentage. But your starting point, the number that you're basing it on, is really your income less the deductible expenses for that quarter. So if you don't have that exact number, it's an estimate, you can always estimate it. And they're as long as you pay, so say last year you owed $5,000 in taxes, or you paid $5,000 in taxes, as long as you, with your estimates, pay the total of what was paid in last year, which is what you paid in your estimates, what's due. As long as you cover that, you'll be fine. You'll have no penalties and such. You can message me separately too, but it's really just the income less the deductions. But if you're not keeping track of your income and deductions, which some people don't, you can always kind of base it on last year. And if you base it on last year, you should be okay as far as penalties and interest goes. You may owe something at the end of the year, but you won't be penalized if you pay what you paid in last year.
About missing previous quarters of estimated taxes.
That's okay. You can always do it this time. But the worst case scenario is that they'll just give you they'll just charge you a little bit extra on that bottom line. It's a small percentage, it's not a big percentage, so they're not coming after you, but you might have to pay just a little bit extra, maybe like $10 extra, or I'm not sure what the exact percentage is. But that's what happens when you don't pay your estimates on time. You have a little bit of interest that's accrued there.
I'm going to jump in on that one too, because having been filing Schedule C for a long time, when income goes up and down, it can get confusing to do your estimated taxes. So I always look at what did I pay at this year, and then I take that 100% of that divided into 4. And if you do that and pay your quarterlies that way, you will never be hit with a penalty. Sometimes you'll get a tax return, sometimes you'll have to pay taxes, but you'll never get hit with a penalty. And then you can budget it into your cash flow. Okay, Cedric has several questions. Oh, no, it's the same question, just over again. Cedric? All right, he wanted to know what the quarterly filing dates are.
It is the 15th after the it's the fourth month, the 15th. So January, February, March, it's April 15th.
April 15th.
So it's every fourth,
The April 14th, and then the fourth month after that, and after that, and after that. So whatever.
And you need a form.
August.
You need a form to file it, so they have the dates on the form as well. All right, I'm
Yes.
gonna move into my presentation. There are a couple of questions hanging out, but I'm gonna run into my presentation, then we'll go back to full questions and answers. All right. So let me see. Oops, where did my presentation go? There it is. I have a lot of windows open on my screen. All right. So basically, I want to talk about some best practices. We've already gotten into some of this, but basically it is important, it's essential that you keep track of everything when you're running a business for yourself. You need to know how much is coming in from your effort. You need to know what you spent to earn that money. Those two are very important. It's the only way to know if you're profitable on paper or in fact. And you can be profitable in fact and not be profitable on paper. That can happen at times because of the things you can deduct that other people can't normally deduct, like a home office, things of that sort. So that can sometimes play to your advantage. One of the most important parts, and this has been mentioned, is tracking your finances, making it a regular part of your business. It's not something you should do at the end of the year. It's not something you should do once a year. It's something you should do on a frequent basis. Pick a frequency and stick with it. A little record keeping regularly is nowhere near as daunting as record keeping all at once or in big batches. Personally, I recommend doing a little time every week. I put about an hour in a week or a little less, depending on the week. I usually do it Monday morning. It's usually how I start my Monday, is with a cup of coffee and some finances. But that way it becomes just part of everything I do, and it becomes a non-item. It's not a project. It's not a task. I'd say no less than once a month if you're going to do it. If you do it less than once a month, it becomes a project. So you want to make sure that you're constantly keeping on top of this. And after a while, it just becomes something you do without thinking about it. You don't have to force yourself to do it. You just do it. What do you have to keep track of? Save every receipt. It's important to save the receipts. You may not know if you can deduct it when you spend the money, but you can't deduct it if you don't have a receipt for it. You need some proof that you spent the money. And I strongly encourage people to organize their receipts. If you get electronic receipts, create a folder for them. If you get paper receipts, create folders for them. Best if they're categorized, but at least keep them all in one place so they're easy to sort through and find. Nowadays, most of us get both paper and electronic receipts, so you have to know how to reconcile them. I recommend all of your folders be labeled by category. The categories you'll learn over time as you begin to do your accounting and file your Schedule Cs. These categories will relate to the little buckets you putting your expenses in on the actual Schedule C. And write notes about what the receipt was about. No idea how many times you will pull a receipt out and go, what was that for? And you can't read it properly anymore. You can't see the codes, or the codes are store codes, not an actual description. So if you write it down at the time, also, like if you're at a dinner and you're spending money on dinner and it's a business meeting, write down who you were with. Also, cash expenses and income need to be noted. There is an underground economy, but it's not a great idea. If you spend cash, write down what you spent it on. If you take cash, write down what it was for. Keep track of all payments to you. If you're at a art market and you're selling your work, somebody buys something, even if it's if it's just a greeting card, take the 6.25% tax on top of what the cost is, and keep track of what it was for and when you got it. You want to know who and for what, and that'll help. Your invoicing system will help with that. So we talked earlier about software. You definitely need a tracking system. Software is way better than a paper system. You can do it in a spreadsheet or a text document, but as was mentioned, best to use dedicated systems that actually are designed for this. A good software can help you organize, and it can also nicely help you learn about accounting. One of the most important things is to know enough about accounting to keep your stuff straight, even if you use an accountant or a bookkeeper or a tax preparer. If your stuff is a mess, if you're bringing it in like in a shoebox, it's not going to be the best day for the person you're working with. There are good ones that are free, there are good ones that are inexpensive, and there are good ones that are expensive. The important thing is to find one that works the way you think and covers all of the bases that you need covered. Some exist for the phone, some exist for the computer, and some work on both platforms. You have to think about what you need for that. Or you may prefer to just work with a pro and have the pro do it all for you. And that's an option if you can afford it. If your business is profitable enough to spend the money on that, and if it's better for you to be spending your time on your business than on bookkeeping, then certainly check into that as an option. Now, there are lots of good software options. I'm going to put a list of reviews in the chat in a minute. But I'm going to present the reviews. These reviews are all to business accounting software, and they're comparative reviews. What I want to tell you most about these is every one of them has a section in the article about how to pick software. And it's really important to read those sections about how to pick software, so it gets you thinking about, what do I need? How do I work? How do I think? And what will I actually do and what will I not do? I also include one link to personal finance software, because reviews of personal finance software, because some people are just too daunted by business accounting. If they find that to be too much, start with personal finance software, get your own personal finances under control, and then go from there to business accounting. So they will help you these reviews will help you understand the difference between accounting software and personal finance software, and they can help you figure out what meets your needs. So these links will all be on the website later, in the resources as well, but I'm going to put them in the chat now so you can grab them. Okay. So. No. Got to copy it first. All right. So those are all links to to reviews, and I suggest that you check some of those out. All right, back to questions now. Let's see, we had a couple that we're waiting on. Jade Olson.
Oh, hi again. Thank you. Yeah, I know that I bought a printer this year, and I know that's an asset, but I just don't really understand how that works with taxes. Is it an office expense, or how does it work?
It is an office expense. It would only go on your assets if it's a certain dollar amount, depending on how much your company actually makes. And that is really determined by your CPA. And if you're a really small business, you're not really making a lot, it's really not an asset, it's just an office expense. I hope that answers your question. So usually an asset is something that's usually over $1,000. Sometimes even higher, depending if you're like $1 million company. So for a small company, it might be $500. It's really determined by a CPA.
Okay.
But if it's like a printer that was like $30, $100, it's definitely an office expense.
Thank you.
But you can definitely expense it.
Thanks.
You're welcome.
Hey, Heather Pilar.
Hi, so I just wanted to know a little bit more about gifts and donations because I'm planning a Kickstarter type campaign. And how would I I guess put that on my tax return?
Well, you have to be, are you a nonprofit?
I do have a nonprofit, like if it's over $1,000, it will be they would take that and give a receipt, all of that.
Okay, and I think, Dan, you can speak because you guys run a nonprofit over there, but if you have a nonprofit, it's a little bit different and it's gonna go on a different tax return. If it's an actual donation. But you know, if it's something, I'm trying to think how else it would be classified, but if it is a donation, you're giving them a receipt, it is something you have to report, but on a different tax return. It's not going to be on your personal tax return.
Right.
It's going to be a whole separate.
Anything that goes to your nonprofit has to be on your nonprofit's 990 and your nonprofit's
Yeah.
if you're going to be getting any income, even as donations that are going to you personally, their income, and you have to file them on your taxes.
There, just so you know, there is a QuickBooks that is, used to be like $50 a year, but I think it got up to 100 for nonprofits. It's $100 a year, which is really cheap for QuickBooks for nonprofits. If you email me, I will email you the link. It's a different link than just regular QuickBooks.
Okay. What if if it's a gift? What about that?
If it's a,
Does Kickstarter work on gifts? Or
I'm not sure what Kickstarter, what you mean by Kickstarter, but it would be the same thing. So if someone's giving you money, and it's, you know, something you're going to give a receipt for, just like Den was saying, it does go on a separate nonprofit tax return, and otherwise, it is income too. I mean, if it's a family, giving you a gift, that's something different to you personally. It's something different if someone wants to invest money into your business. Those are two separate things. If it's not the nonprofit donation, a gift to you personally, or you know, a contribution to your business as putting equity into your business, then yes, it is income to you if it's not out of those three categories.
okay. So, and a gift is, do I declare it or not?
the business does, the nonprofit.
Yeah, if it's a gift to the nonprofit, then it goes on to nonprofit tax. If it's a gift to you personally, there are rules that the IRS uses to define what counts as a gift.
Yep.
Not everything, just because somebody gave it to you doesn't mean it's a gift. You have to make sure that it follows the IRS rules. They're not that complicated, but you do have to check them out.
Okay. All right. Thank you.
No problem. All right, we have a question from Louisa Harris. Louisa?
Yeah, hi, sorry. So you mentioned that you have to have receipts, and totally with you on that. But if it is on your credit card, let's say it's very clear, I don't know, either Staples or something like that, would it be okay if you don't have the receipt and you just check it off as an expense?
Is it a business Staples card?
No. It's just your regular credit card that you pay with. It can be your bank account, whatever, right?
Your business bank account or your personal bank account?
It's personal.
No, you need the receipt.
You need the receipt. Okay, perfect. Thank you.
Yep.
It's also good to have the itemized detail in case you ever have to prove it.
Oh, yes. You also want it on your the
Yes,
information from your personal stuff to show that you paid for it personally. Yes, but you also want the receipt because you paid for it personally.
Right, the receipt, and if I also keep the bank or
Yes.
credit card statement, right, as
As
reference
much
in case.
as much
but-
detail as possible. You want to keep as much
Right,
detail as
okay.
possible. Yep.
Right, thank you.
Julian Wan.
Hi. Yeah, actually, my question was very similar to Louisa's, except I would be using a business credit card. So if I didn't have a receipt, but I use my business credit card, is that an issue?
No, I think you're fine. That's why you always want to separate. They're more lenient. Okay, well, they always want receipts. If you ever get audited, they're going to ask for them, and they're going to ask exactly what Dan was saying, that they want to know what it was, why you're doing it, especially if it's meals, if it's traveling. But if it's on a business credit card, a business account, you are going to get more flexibility than you are on your personal account, because someone's going to say, well, how do I know this staple charge in September was business, but this staple charge in October was personal? How do you even know? So if you have a business account and it's just business, that's your best way to do it if for some reason you don't have the receipt. So you're fine if for some reason you don't have the receipt, although that's not the best way to do it. You are fine.
Okay.
Yeah.
All right. Thank you so much.
Also, if you get an accounting system, a lot of them will let you upload the receipts to there, so you don't have to keep them once you upload them.
Yeah, I have QuickBooks, but the thing about QuickBooks is you need to use it. So I pay for it every month and don't use it.
But you could take a picture of it and email it to the address that they assign you to it, then you can just get rid of it.
Yeah.
Yeah, and again, keeping them and keeping track is really useful. And just build it into your daily activities. When you go spend something, put it somewhere. When you get to your office, take it out of wherever you put it and put it in the folder that's in your office. And then when you get to your accounting software, put it in your accounting software.
It's very important to put it in your accounting software or take a picture of it, because I have clients that give me receipts that you can no longer read because they don't last that long. So it is very important to do something with that receipt soon. I have a client that gives me them in an envelope and half of them I can't read. Take a picture of it, send it to me.
All right.
Upload it.
Iva Brito has a question.
Hi, sure. It's Eva. My question is, if you're using your vehicle for business and personal, can you expense some of your insurance on it or no? Like if you're
That's a great question. It depends. So you have two options. You can depreciate a portion of it, or you can take the actual expenses. But you want to make sure you are accounting for the actual expenses. So when it comes time to file your taxes, you can make an informed decision on which way would better benefit you. So it's a long answer for that question. It depends. You can, but you might have a better advantage doing it a different way. Regardless, you want to keep track of it, because more likely than not, you're going to need that number come the end of the year.
when you say depreciation, how would you even calculate?
So you have a car and you bought it for 20,000. You're going to go ahead and divide that by a certain number of years in calculation. And what you're going to do is take a percentage of that. So say you expense 5,000 of it a year. You're only going to take a certain percentage. That's going to be based on mileage you drive. So you're going to do a calculation. How much mileage do you drive as a business? How much mileage do you drive personally? Maybe it's 50-50, maybe it's 60-40. And then you take that 5,000 and it's divided by whatever is personal and the business amounts deducted. And say it's now 2,500 you're deducting. You're going to look at your actual expenses, some of which you also have to then take a percentage of. Maybe some of them you take a full amount. So it's a little bit of a calculation at the end, and you want to do whatever is going to give you the biggest deduction. But how you split it in the end when you're depreciating it is based on what you drive personally to what you drive business related, which then goes back into what they were saying earlier about tracking your mileage, because you'll need to know what the business mileage was and what your personal mileage was.
And to that, a follow-up question, would that be the same situation if you do repairs and so forth on your car?
Yes.
Okay.
Also,
Okay.
recently, a few years back, the IRS changed the rules for Schedule C filers and deductions for your car or for business travel. And whatever you pick the first time you write it off, you're stuck with for the life of that car.
That is correct. Thank you.
So what you want to do is the first year you're going to write off car expenses, run it both ways, and then see which is the better for you. If it's better for you this year, it's probably going to be better for you for the life of the car. No guarantees, but probably. And then track it that way, because you cannot say, okay, this year mileage is better for me, I'm taking mileage. Next year, expensing the car and taking depreciation is better for me, I'm going to do it that way this year. You pick one and you're stuck with it until the car is no longer yours or no longer being used for your business.
Okay, thank you so much.
We have other questions out there? Can't imagine that you've completely run out of questions. Wow, we've made them all tax filers. Also, I'm going to also mention that the rules are a little bit different, and you guys can jump in on this. The rules are a little bit different for certain things that you can write off when you're writing off as a Schedule C or sole proprietor than when you're writing off when you incorporate yourself. So if you incorporate yourself as a business and get a separate tax ID, the rules change.
And a big one on that is how you pay yourself. So if you are incorporated and you're making a profit, they are looking for you to give yourself a paycheck and pay payroll taxes. That's number one. Where if you're just a Schedule C, you can't give yourself a paycheck. You can pay yourself, but you're not running it through a payroll company where you're paying payroll taxes if you're just a Schedule C.
Which is why I incorporated myself, so that I could pay myself through payroll and pay payroll taxes.
Otherwise, you have to pay them yourself as part of your estimated taxes. You'll be paying Social Security taxes for both you and the business and things of that sort. So you want to make sure you keep good track of how that all plays out and make sure you keep enough money for the cash flow for it. I'm sure there are other questions out there. We can't have covered everything you're thinking about. But one other thing I forgot to mention as well is that you can, and I'm going to let Melissa and Jenny talk a little bit more about this, but you can lose money occasionally. And if you lose money on your Schedule C, if that balance is negative at the end of the year, you can deduct that from other income you have as money you're making from a job that you get regular checks or whatever. But you can't do it for long.
Right. And you know what, actually, now that you say that, I meant to cover that when I was speaking. I think I think it depends. We've had, and I talked to actually Dan about this a little bit before our presentation, and the rule of thumb is they don't want to see more than 3 years of losses. But there's been turbulent times, and it's been a little bit different with COVID. So I'm sure the 3-year marker is a little bit different now. But the other thing I'd like to say is, and I referenced this when I started, but now I'm realizing I didn't touch upon this when I was talking about it, is there are times where people don't put all deductions because they don't want to show a loss because they're going for a mortgage, they need a car, what have you. I definitely raise some caution on proceeding that way. You definitely want to be working with a CPA or a tax advisor or something when you're making that call, not to put on deductions. But A lot of people do go that way because they need to show a certain amount of income, which means they got to pay taxes on that income. But sometimes people need that for financing, and that's why they do it. But yeah, normally it's 3 years. Before pre-COVID, it was a solid 3 years. They don't want to see losses past that. Again, will something happen? Who knows? Probably not, but that was the rule of thumb before COVID.
Veronica Holmes has a question. Oops, go ahead.
There's a lot more I wanted to cover, but I'm not good at public speaking. I'm good at answering questions, but any of you are allowed to reach out to me, and I am at Co-Creative downtown 3 times a week, and I am here to answer any questions you want to come over, call me, email me, come visit me, and I am here to answer questions. I help a lot of artists here at Co-Creative. I have ones that I just help out randomly. I have ones that have become clients of mine. I'm here to help. I have grown up in New Bedford. This is my hometown. I used to do the books for New Bedford Art Museum. I'm here to help. So come whenever you want.
Back to Veronica, you had a question?
Yes. I have a question regarding inventory, because each time, because I file my own taxes, but I noticed this question each time is asking about as I am, by the way, I'm an artist, so I always have stuff that I don't sell, and I consider that inventory, so to speak.
Yep.
But when you're filing and you already put in claim for supplies and everything, and this is, well, now you can't add supplies, and how do you differentiate both? Because it's a finished product, it's up for sale, yet you can't declare that as inventory. It's from what I understand, and I never did it because I never want to get in trouble.
Well, I mean, so when you're filing a Schedule C, you have a little bit more flexibility on the reporting. Some people, when they're on a Schedule C, consider themselves cash basis. Although if you do have legitimate inventory, you're not supposed to be cash basis. But a lot of people do go that route, and they report expenses as they happen and income as they happen. So if you go ahead and you purchase all the supplies to make something, and then that piece becomes something you're holding on to sell, a lot of people report those expenses as they occur. So when you incur those expenses to make the piece, you're claiming those expenses when they're made, and then you're reporting the income when it's sold. And what some people do, and the reason why they pull this stuff into inventory, is because they don't want to pay taxes on that sale. So say you hold something for a year or two and then you sell it. Now you have this income number for something you're selling and no expenses to offset it, because you claim those expenses a couple years prior. So a lot of people put in inventory, don't claim it as an expense, which all aligns into reporting it on your accounting software. It's hard to keep track of inventory and expenses if you're not in a system. So the more complicated route is putting into inventory to offset the income when it happens. If it's not within the same year, if everything's within the same year, you're fine. But if it's year over year, that's kind of when people put stuff into inventory. So when they sell it, they have the revenue coming in and the expenses going out, so they don't pay as much tax.
Okay.
Does that help? It's a more complicated thing to explain, the inventory piece of it, but
It is, because say you've had something for 5 years and you already claim the expenses, the supplies, everything like that.
Yeah.
Now 5 years later, now you're gonna sell it.
Yeah.
But each year you're doing it, do I just leave it and never add it again? Just leave it, and then when I sell it, that's when I add the
Correct.
income. Okay.
Yeah.
Unless it's something you have to continuously update or improve, then you have expenses every year towards improving it. Unless it's something you do and it's just static until it's sold. But yeah, so that's the con of taking the expenses right away. 5 years later, you have this income coming in, you have no expenses to offset it, unless you're creating something new, then you have the expenses of that new piece.
Okay, I like what you just said, static until sold. So
Yeah.
I like that.
There is a small problem with that for artists. I've run into this myself, is that the cost, the value of it in your inventory is only what you can directly apply to the piece. So if you bought a bunch of tubes of paint, you can't really say how much of the paint went into that painting. You can say how much the canvas cost, but you can't say how much of the paint was. So there are things that you can use as inventory and valuing your inventory, but it's not everything, unless you have a clean way. Like when I create a photo print, the cost of that print can be in my inventory. The cost of the shoot, no. So because the shoot is a whole bunch of pictures. So you have to look at what's directly relevant to that piece if you're going to inventory it, and keep that separate from the stuff that's general expenses that go to a lot of your inventory, like your paint. Just to confuse you more.
That's like, payroll is very complicated. Payroll taxes is like a hard thing to understand. Inventory is one. So, but hopefully that helps.
If you're making art constantly and you're selling, at a steady, even if it's a slower clip than you're making, generally speaking, it's probably not worth keeping inventory, generally speaking. If you do a big, huge burst and you're not selling anything for 3 years, and then you take it out on the road and start selling it, different story. Okay, we had another question in here. Julian?
Yes, hi. One last question. I know you guys said we could contact you or whatever. How do we go about that?
Dan's gonna post the slide on the website, and on the first page of the slide is our email addresses.
All right.
And our phone numbers.
What's the website?
The slide that Melissa and I posted.
It's Practice Best Practice is the website, practicebestpractice.com.
Okay, perfect.
Which you should all know about and should bookmark, because we have lots of good workshops up there, and we will continue to produce them as long as our grants continue to come in. So,
all right, thank you all very much.
You're welcome, and you can ask as many questions as you want. This doesn't have to be your last.
Yes, we're happy to take questions. We got a bunch of people in here who have yet to ask questions, but we'll take all the questions you have.
We are here to help.
Right. There's probably smoke coming out of their ears at this point.
Right, is there any chance that you can put up some of the slides, maybe trigger some questions?
Sure. Jenny, do you want to take a run through your slides again?
Yeah.
If you see something that triggers a question, just raise your hand or just unmute yourself and ask the question.
Let me exit full screen so I can restart it.
Thank you.
So this is our contact information.
Oh, you're not sharing your screen.
Oops.
I'm not sharing my screen. I'm bad at that. Told you I was bad at that. Share screen. This one. Okay, is it sharing now?
Yep.
Okay. Things to remember. Exit full screen. So I can start over. So this, start from the beginning. Jenny, this is our contact information. So everybody needs that.
Veronica has another question, so go ahead and ask Veronica.
This is really quick. I'm a sole proprietor and with my business and with a tax ID. I often use 2 of my kids to when I vendor. Can I include them as part of because they get compensated, but I never add them as part of a payroll or anything like that. Can I start doing that, or is it? And I use their car because I no longer drive.
Everything, it depends, but there are people that do put their children on payroll, yes.
Okay. And it doesn't matter how much, just
it always matters how much the payroll. It has to be something reasonable. So it's going to depend on, are they really working? Are they how many hours? And if they're more owners of the company and helping you run it, then it is more of a base on the income amount, more or less. So that depends too, but it has to be something reasonable, I think, is the main point there.
okay. Because they whenever I go places, they come with me. 2 of them, well, 1 have to be there, but usually 2. And they help with everything. They get compensated and stuff like that, but I've never really added them as dispersing any money or anything like that.
Okay, yeah. Well, if they're really working for you, then that's absolutely fine. And just needs to be a reasonable compensation.
Okay.
And you need to track also, are you paying them as 1099 employees, or are you paying them as W-2 employees? Are you actually on a payroll where you're taking deductions, or are you treating them as freelancers? So you have to keep track of that as well.
Now,
Right.
what would be the difference in treating them as freelancers? Oh, it would be the 1099, right?
Right. So either you're running them through payroll where you're paying payroll taxes, or you're paying them in cash and you're giving them a 1099 at the end of the year.
Okay. I have never done that, but
You should. It's a write-off.
Okay.
It is a write-off if you give them a 1099.
Okay. All right.
Or if you pay them or if you pay them through payroll and you pay payroll taxes.
Okay. All right.
And if you pay them W-2 through payroll, I highly recommend a payroll company because they know all the ins and outs, all the rules, guidelines, and all that stuff.
Okay.
I also use a payroll company. I would never run payroll for a client without a payroll company. I don't know all the ins and outs. I would never say I do. I would never even try to. That's not my thing. I have a payroll company that does all that stuff for me.
Okay.
I don't want to do that. But yes, do that. And then if for 1099s, it's anything $600 or over.
Yeah. Okay.
Also, if you go to our website, to the Pay Equity and Justice for Freelancers workshop, in the resources, there's information on how to decide whether someone can officially legally qualify as a freelancer or not. So I suggest that you go look at that as well.
Okay, great. Thanks.
Yeah, there are rules if they qualify for a 1099 or payroll.
Okay. Kaz has another question.
Oh, I just wanted to know which contact should I use if I have more questions about estimated taxes?
Tax questions should go to Melissa, and bookkeeping and should go to me. So expenses and stuff should go to me, and taxes should go to Melissa.
Okay, because I think it'd be under taxes because I have more questions about specific circumstances and stuff.
Yep, that should go to Melissa.
Okay.
Louisa Harris raised a hand.
It's actually great because it's exactly the question I wanted, the slide Unfortunately, I joined a little later. So, but about the grants, I was wondering, and I'm sorry, you probably talked about it earlier. When would you have to pay taxes and when you don't? Sorry, the slide before this one was
It's
saying
all right.
something. I was reading it.
It's all right. Let me just go back.
The question of paying taxes on grants, was that the question?
Yeah, so if we get a grant, if I get a grant, I did not, I'm sure it's considered income.
Well, it depends on the grant, but most of them are taxable in both federally and state, and it'd be taxable the year it's received.
Sorry, I missed it because you were coming in breaking for me. Sorry, I'm having a hard time with the connection. So can you say it one more time? Sorry.
Yep, so grants typically are taxable federally and state. There are exceptions, especially anything related to COVID-19. So it's always good to look further into the grants. And they're taxable when it's received, when the actual cash is received.
I got you. Okay. So generally, in general, besides COVID situations, it's considered taxable completely. Okay. Thank you.
I'm just slowly going through the slides, so anybody can tell me
Absolutely.
to stop.
And people feel free to jump in and ask questions or raise your hand and we'll call on you, or type a question into the chat. We're getting a lot of good questions here. Anyone else? All right, I'm gonna while we're soliciting
I'll
questions.
probably ask one more.
Yep, go ahead.
So traveling expenses when you are out of the country and you have to pay for your food or hotel. So lodging, traveling, I don't know, renting a car and so forth. Those are deductible. I think my understanding, just the meals become only 80% deductible or something to that extent.
When you're traveling away from your home, there is a certain dollar figure they consider deductible. I don't know what it is off the top of my head, so it's a little bit different. So you're pretty much although more people than not just deduct the whole thing, there are guidelines on how much you should be spending on your travel meals.
Oh, that's interesting. So if you're gone for 2 weeks, they're going to tell me.
Well, there's guidelines for it. So I suggest reading on them, but there are guidelines for them. Yeah.
The guidelines are pretty clear. And when you're doing actual travel and staying over, there are different rules than when you're just going from place to place, like driving from your studio to deliver some paintings or whatever. So
oh no, I meant outside the country. So
yeah, it doesn't even have to be
close
outside of the country. It just has to be where you're not staying at home. If you're staying somewhere other than home because of the business travel, then there are different rules apply. And it doesn't matter whether you're out of the country or whether you're in the country.
Yeah. And this stems from like back in the 80s where a lot of people abused the rules and, you know, they would go to fancy dinners and they would do all sorts of things. And it's the people that abused the rules a while ago that now make it a little bit stricter for you and I when we're doing regular stuff.
Maybe I'll follow up with you. Thank you.
Autumn Sear has a question.
Hello. So like this one's pretty so like if you donate like art itself, can you deduct that? And if so, would you calculate have to calculate what the art piece is worth? Like, how would that work?
That's a really good question. I get that question a lot. So donations are, purely from the goodness of your heart, because there's no big advantage to it other than doing the right thing for, another entity or person, as well as maybe a marketing upside to it as well. Because when you donate something, basically you're taking the expense but not the income. So you donate a piece of art, you're then expensing whatever it costs to make it, but you don't have any income tied to it. If you wanted to go ahead and put that on your books as an actual contribution to the nonprofit or what have you, you're then going to be needing that income number on your books too. So say you're donating a piece that's worth $1,000, you would have that $1,000 as income and then that $1,000 an expense. So it's a wash. And in the end, the only thing that will really show up is this expenses related.
That makes sense.
Yeah, and let me just say this is one of the reasons that we even exist as best practice. There are ways to deal with donations that are better for the artists and that are worse for the artist. Straight out donation is the worst way to do it, because you can only take off the value of the materials that it cost you to make it, not the value of the art. You're better off to work out an arrangement where you sell it to someone, they donate it, and maybe you get a piece back of the money. A lot of organizations are doing that now with things where they put a minimum price on and they treat it like a gallery sale. They sell it and you get a piece of the money and they get a piece of the money.
It's kind of like a auction kind of thing.
Yeah, it doesn't have to be an auction. It can be just a sale, but sometimes it's an auction. Either way, the best thing to do is to make sure there's an arrangement whereby you're not getting nothing.
Yeah.
Thank you so much.
My understanding is that and I'll defer this to our other two panelists to verify or deny, is that if you put it in and there's a minimum value and it sells for whatever it sells for, then what you can take as a deduction is the value it sold for, and what you have to declare as income is how much you actually took. What it's sold for, yeah, I'm not. Maybe. I think you're right on that. Well, my understanding of why that is because now you actually have a legitimate value proposition. That work was actually valued. So you can say what the value was, you can say how much you took, and the difference is your donation. Yep, I agree with that. Yes. So that's the better way to go.
Thank you so much.
Paul Deere, a question? I'm going to launch the poll while we're doing the last bunch of questions. Please fill it out. It's anonymous, and it really helps us if you fill these out. You can do that while we're continuing to ask questions and talk. Paul, are you still out there?
Yes. Thanks. I just recently received an ArtNet grant from the New Bedford Creative. For many years, I've been running a nonprofit, my wife and I. But I just received this ArtNet grant as an artist for a segment of a book that I'm writing that contributes to the work that we're doing as with our nonprofit. And so I had put in there, it was something someone said earlier, is an ARPA, the ARPA grants taxable?
Well, I think
Do I have to do that in terms of filing as a Schedule C versus the work that I will be generating and tracking that will be contributing, be part of my work with our nonprofit? We have a learning organization.
so. That's
We publish. We have been doing workforce training, and now we're making a transition over to publishing a journal that addresses some of the workforce development issues and some of the diversity, equity, and inclusion issues that are emerging in today's marketplace. I don't know. This is probably something that I should come down and either talk to Melissa or Jenny about, and I'm sure it's sounding confused.
well, I'll give you like a summary. So if you're a nonprofit and that grant is being reported under the nonprofit's tax ID number, it's a little bit different because nonprofits don't, you know, that the way they're taxed is a little bit differently. So it's not exactly taxable income for a nonprofit.
No, it was granted under my Social Security.
So there's a couple ways you can go about that. You know, if it's under Social Security, it's your Schedule C and it's taxable to you. I'm not sure on that specific grant if there are any exceptions to that grant. Say there are no exceptions. It's taxable income on your Schedule C, but there are things you can do and to kind of offset that income especially if it's related to the nonprofit. There are things you can do where you can kind of donate your times and services for the nonprofit, since it's all kind of interrelated. So it could be a wash, but it all depends on what you're doing with the funds, how you're allocating your time, what paperwork you want to file. But if it's under your tax ID, basic information, not knowing too much about that specific grant, it's going to be a Schedule C taxable event for you.
Okay, thank you very much.
Yeah, and I can tell you that particular grant, the ARPANET grants, are, in fact, if they're to you and your own Social Security, they are taxable. Those are from the COVID money.
Okay, thanks, Jen.
Jenny, I think you can turn off the screen sharing now. Okay. Other questions out there? We have exhausted them. All right. Well, we'd like to make sure we have enough time so that all the questions get answered. We'd like you to ask any questions, even if you think that they're unusual or out of place, because or you know, there are no stupid questions here. If you're having the question, somebody else likely has the question, or somebody who views this video later might well have had the question. So I'll give you another shot to think about questions. I'm going to turn it back over to Ashley for a minute. She has a couple of announcements that she needs to make. And while that, think of any more questions you might have.
All right. Thank you, Den, so much. So I just wanted to make sure that I thanked FRAC's sponsors that made this workshop possible. And that is actually the Mass Development's Creative Catalyst Grant Program, which is funded by the Bar Foundation. So I thank them very much for making this possible. And I remind everyone again, go visit thefrac.org. You can follow us on Instagram. You can follow us on Facebook and get all the wonderful information coming up about our Ignition project. Thanks.
And the poll is still out there. Please fill out the poll. You can do that right on your screen. We like to see as many people as possible fill that out. There's some optional questions, but the more answers we get, the better it is for us and for our ability to continue to do these. Okay, we have other questions out there? All right, I guess we have exhausted all the questions. That does happen sometimes before the full 2 hours. But it is 10 after 7, so that's a pretty good run. I think we covered a lot of material. I want to thank both Jenny and Melissa for all the work they did getting this together and putting their presentations together and being here to answer your questions. Again, I want to thank FRAC and our partners and funders and sponsors for putting the money into our series of workshops this year. I want to remind you all that all of our workshops are up on our website, and you should go to our website and keep track. And we announce things in our email list. So if you're not on our email list, sign up. You can do that at the website as well, or follow us on Facebook or Instagram, although we're a lot more active on Facebook than we are on Instagram. All right. So any final words? And I'm going to end the poll, and I'm going to thank you all for coming.